Hey everyone, and welcome back at Talk Tickers. We're going to be breaking down Workday's Q3 earnings call today. And this one's got some serious juice, let me tell you.
It does.
Yeah.
We've got the transcript from November 26th, some market summaries and some of the latest news articles so we can give you the full picture of what's happening with this enterprise software giant.
Yeah. And whether you're an investor or a tech enthusiast or just curious about, the future of work, this deep dive has something for you.
Right.
Workday's making waves, especially when it comes to AI.
For sure.
And their strategy might just change how you think about your portfolio.
Absolutely. Let's start with the numbers.
Okay.
Workday had a solid Q3 with 16% growth in subscription revenue.
Okay.
Which is their core business. They're on track to hit their full year target of $7.703 billion in subscription revenue.
Wow.
Which is a 17% jump.
Okay, so healthy financials, but what's really driving this growth?
Well, a big part of it is their full platform approach.
They're not just selling individual software products. They're offering a whole suite of interconnected solutions.
Okay.
And this is proving to be a winning strategy.
Yeah.
Especially in government and higher education, where almost 90% of their new customer wins
9%
were for the entire Workday suite.
Wow. That's huge. So it seems like once companies buy into the Workday ecosystem, they're going all in.
Exactly. And that's a smart move on Workday's part because it creates a sticky ecosystem.
Right.
Once a company adopts the entire suite, it becomes much harder for them to switch to a competitor.
Okay.
Think about all the data, integrations, and processes that would need to be migrated. It's a massive undertaking.
Yeah.
And this gives Workday a significant competitive advantage in the long run.
So it's like building a moat around their business.
Exactly.
Makes sense. And they're making big inroads in healthcare.
Right, absolutely. They just landed a major deal with Common Spirit Health,
Okay.
one of the largest healthcare systems in the U.S.
This win underscores Workday's growing momentum in a sector that's ripe for digital transformation.
Okay, so we've got strong financials, a winning platform strategy,
Right.
and significant wins in key sectors.
Yeah.
But let's talk about the elephant in the room, AI.
Right. This is where it gets really interesting.
Yeah.
Workday is betting big on AI, and it's already paying off. Over 30% of their customer expansions in Q3 involved at least one AI solution.
I mean, their talent optimization tool is a great example. Companies are seeing turnover rates plummet by up to 39%.
Yeah.
Using this AI-powered tool, imagine the cost savings there.
It's not just about cost savings. It's about retaining top talent in a competitive market.
Right.
This tool helps companies identify employees who are at risk of leaving.
Okay.
And provides insights into what might keep them engaged. It's giving companies a real edge when it comes to talent management.
And then there's their AI-powered recruiter agent, which is just on fire.
Right. In Q3, they signed more new customers for this tool than in its entire 12-year history. Wow. And get this. It's boosting the average selling price of their recruiting solution by almost 150%.
Okay.
People are clearly willing to pay a premium for AI-driven results.
So how does this recruiter agent actually work? What makes it so special?
Well, it uses AI to analyze millions of data points, like resumes, job descriptions, and even social media profiles to identify the best candidates for a job.
Okay.
It can also predict which candidates are most likely to accept an offer, which saves companies time and money on the recruiting process. It's like having a super efficient, data-driven recruiting assistant working for you 24/7.
That sounds incredibly powerful. It's no wonder companies are flocking to this solution.
Exactly. And this is just the beginning.
Oh.
At their recent Rising conference, Workday unveiled Illuminate,
Okay.
their next-generation AI platform designed to supercharge productivity even further.
Okay.
Think AI agents that automate everything from recruiting and managing expenses to even planning for succession.
AI handling succession planning. That's a bold move.
It is. They're using AI to analyze employee data and performance to identify potential successors for key roles.
Wow.
This can help companies avoid leadership gaps and ensure a smooth transition when senior leaders retire or move on.
Right.
It's about proactively managing talent for the future.
So it sounds like they're really pushing the boundaries of what's possible with AI in the workplace.
They are, and they're not doing it alone.
Right.
They've formed strategic partnerships with giants like Salesforce and Microsoft to integrate AI into even more workflows. Plus, they're building an ecosystem of partners who are developing custom applications on the Workday platform.
Yeah.
They now have over 1,000 partners.
It's smart to leverage the expertise and reach of these partners.
Absolutely, by fostering a collaborative ecosystem.
Right.
Workday is ensuring that their AI solutions reach a wider audience and cater to a diverse range of needs.
Got it.
It's a classic win-win scenario.
And they're not just focused on the U.S. market, are they?
No, they're definitely thinking globally. They see huge growth opportunities internationally.
Right.
They just formed a strategic partnership with NTT Data in Japan and have scored major wins in Europe and Australia.
Wow.
While only 25% of their revenue currently comes from outside the U.S., they're clearly positioning themselves for global domination.
What are some of the challenges they might face as they expand globally?
Well, each region has its own unique regulatory landscape, cultural nuances, and competitive dynamics. So adapting their solutions to meet these diverse requirements while maintaining a consistent global brand identity will be key. Also, building trust with local partners and customers in new markets
Makes sense.
will be essential for long-term success.
It's definitely a complex undertaking, but it seems like they're taking the right steps.
They are, and they've also made a significant leadership change recently. Doug Robinson, who has been with Workday for 14 years, is retiring.
Big shoes to fill.
For sure, but they've brought in a heavyweight replacement. Rob Enslin, a 30-year veteran of the enterprise software world.
Wow.
He's got deep relationships with customers and partners, so I expect big things from him.
His experience and connections will be invaluable as Workday navigates this next phase of growth.
Definitely. So we've covered a lot of ground here. Strong financials, sticky platform strategy, a killer AI game plan, global ambitions, and a new leader at the helm. Workday seems to have all the pieces in place for continued success.
Yeah, it does sound like they're firing on all cylinders, but how does all of this translate to their financial outlook?
Well, they're aiming for mid-teens subscription revenue growth over the next few years, while also pushing their operating margin to 30%.
Okay.
They're confident that AI, along with their expanding platform and partnerships, will get them there.
That's ambitious, but given their track record, it doesn't seem out of reach.
Right.
And now, for the moment you've all been waiting for, our This Is Not Financial Advice segment.
All right, let's hear it. What's the bold trade idea this week?
You ready for this? Short Tesla. Long Workday.
Whoa, that's a spicy one. Tell me more.
Okay, hear me out.
Okay.
Tesla's valuation is built on a ton of hype.
Right.
They're pushing boundaries.
Yeah.
But their fundamentals don't necessarily justify their sky-high stock price. Workday, on the other hand, is like the quiet giant.
Okay.
They're steadily growing, have a massive total addressable market.
Right.
Which means there's still a lot of room for growth.
Yeah.
And their AI strategy is killer.
Okay.
This trade is about betting on substance over flash.
Interesting. So you're saying Tesla is more about sizzle, while Workday is all about the steak.
Exactly. In the long run, substance wins. Workday is a company that's quietly transforming the future of work.
Yeah.
And their stock price hasn't yet caught up to their true potential. Tesla, on the other hand, well, let's just say the hype train can only run for so long.
I see your point. While Tesla is grabbing all the headlines, Workday is quietly laying the groundwork for long-term success.
Right.
It's a classic value play versus a growth story.
Exactly.
But remember, everyone, this is purely hypothetical, and as always, this is not financial advice. Do your own research. Consult with a financial advisor, and never invest more than you can afford to lose.
Exactly. It's all about sparking conversation and getting you thinking about different investment perspectives.
Welcome back to Talk Tickers. Before the break, we were talking about Workday's ambitious AI strategy and how it's playing out in the real world.
Yeah, and let's be real. They're not just dipping their toes in the AI pool. They're diving in head first.
Right.
I mean, their platform boasts more than 70 million users, generating over 800 billion transactions per year.
That's right, and that's a key differentiator. They have access to an incredibly large and clean data set.
Right.
The largest in the industry.
Wow.
This means their AI models are trained on high-quality data, leading to more accurate insights and better predictions.
But it's not just about the quantity of the data, it's about the context, right?
Yeah.
Workday's deep understanding of HR and finance
Absolutely.
allows their AI to unlock insights that other platforms simply can't.
Absolutely. They're not just applying generic AI algorithms. They're tailoring their solutions to the specific needs of their target market.
And remember those AI agents we talked about earlier? They're poised to revolutionize how companies handle core business processes.
Right.
Yeah, the recruiter agent is already a game changer, but what about those upcoming agents? The expenses agent, optimize agent, and succession agent? Those sound pretty wild.
They are. Imagine an AI that can automatically categorize your expenses,
Okay.
flag potential errors, and even suggest ways to optimize your spending. That's the expenses agent in a nutshell.
Okay, and the optimize agent.
Think of it as an AI-powered consultant that helps you make better business decisions.
Right.
It can analyze data from across your organization,
Yeah.
identify trends and patterns, and recommend actions to improve efficiency, productivity, and profitability.
Wow, that's like having a data scientist on call 24/7.
It is, and then there's the succession agent, which we touched on earlier. This one's really interesting because it helps companies plan for the future by identifying potential successors for key roles.
So it's not just about replacing human decision-making. It's about augmenting it with AI-powered insights.
Exactly, and the beauty of Workday's approach is that it's all integrated within their core platform.
Right.
There's no need to move sensitive data outside the system,
Right.
which enhances security and streamlines workflows.
It's like a one-stop shop for all your AI-powered business needs.
Right.
And speaking of smart moves, they also acquired Evisort, a leading document intelligence platform.
That was a brilliant acquisition.
Yeah.
Over 80% of business data is unstructured, meaning it's trapped in documents like contracts, invoices, and policies.
Oh, okay.
Evisort's AI can unlock that data, giving companies a whole new level of visibility and insight.
So they're essentially making all that dark data usable and actionable.
Exactly. By combining Evisort's document intelligence with Workday's existing AI capabilities,
Okay.
they're giving companies a powerful tool to make faster, more informed decisions.
It's like they're building the ultimate AI-powered command center for businesses.
They are, and they're not stopping there.
What else?
They're also fostering a thriving ecosystem of partners.
Huh.
With over 1,000 customers now building custom applications on their platform using Extend.
So they're opening up their platform to let others innovate and create even more specialized solutions.
That's right. This ecosystem approach allows them to tap into the collective creativity and expertise of their partners,
Okay.
which accelerates innovation and expands their reach.
It's like they're building an AI-powered app store for businesses.
Exactly. Their new Built on Workday program, launched less than 6 months ago,
Okay.
is already gaining traction with over 40 partners on board.
Wow.
And it's not just about technology. Workday is also focusing on employee well-being with their new Workday Wellness offering.
Now that's something I can get behind.
Right.
In today's world, employee well-being is more important than ever.
Absolutely. Companies are increasingly recognizing the importance of employee well-being, and Workday Wellness gives them real-time insights into how employees are using their benefits.
So it's not just about providing benefits, it's about making sure they're actually being used and are effective.
Exactly. This allows companies to tailor their benefits programs to better meet the needs of their employees,
Okay.
which improves engagement and satisfaction.
And they've already partnered with some major insurance providers, right?
They have. Guardian, the Hartford, Mutual of Omaha, and Unum are all on board.
Wow.
This highlights their commitment to building a comprehensive platform that addresses the holistic needs of their customers.
It's like they're saying, we're not just here to help you manage your business. We're here to help you create a better workplace for everyone.
Exactly. And all of this is happening under the guidance of a new leadership team.
Right.
Doug Robinson's departure marks the end of an era.
Yeah.
But Rob Enslin's arrival brings a wealth of experience and a fresh perspective.
Enslin's deep understanding of the enterprise software market and his global experience will be invaluable as Workday continues to expand its international presence.
Right. They've already got a strong foothold in Europe and Australia.
Yeah.
And their new partnership with NTT Data in Japan opens up a huge new market.
Their global aspirations are ambitious, but achievable. They're laying the groundwork for sustained growth in these key markets.
Yeah.
So we've talked a lot about Workday's AI strategy, but what does this all mean for the average investor? Why should they care?
Well, Workday is at the forefront of a massive shift in how businesses operate.
Okay.
They're not just selling software, they're selling a vision of a future where work is more efficient, more insightful, and more human-centric.
And that's a powerful vision, especially in today's rapidly changing world.
It is, and their commitment to AI, data analytics, and employee well-being aligns perfectly with the emerging trends in the modern workplace. They're providing solutions that companies need right now, not just yesterday.
So they're not just riding the wave, they're shaping it.
Exactly, and that's what makes them such an exciting company to watch.
Right.
They're not just a software company, they're a platform company, an ecosystem company, and increasingly an AI company.
And now for another round of This Is Not Financial Advice,
Yeah.
where we throw out a completely hypothetical and potentially outrageous trade idea.
All right, let's hear it. Let's see what you got.
All right, how about this? Short Zoom, long workday.
Ooh, that's an interesting one. What's the thinking there?
Well, Zoom was the darling of the pandemic,
Yeah.
but their growth has slowed considerably now that the world is returning to in-person interactions.
Right.
Their core business model is under pressure, and their future is uncertain.
I see where you're going with this.
Yeah.
Workday, on the other hand, is benefiting from the return to the office.
Exactly.
Their platform is perfectly suited for managing the complexities of a hybrid workforce.
Right.
And their AI tools are helping companies optimize their operations for the new normal.
Exactly. This trade is about betting on the future of work. Zoom represents the past, a temporary solution for a unique moment in time.
Okay.
Workday, on the other hand, is building the tools and platforms that will power the workplace of tomorrow.
That's a compelling argument. Workday is a forward-looking company that's well-positioned to capitalize on the evolving needs of businesses worldwide. But remember, folks, this is purely hypothetical, and as always, this is not financial advice.
Right. It's all about exploring different investment perspectives and getting those brain juices flowing.
Exactly.
But seriously, do your own research, consult with a financial advisor, and never invest more than you can afford to lose.
Exactly. Now let's take a moment to digest all this information. Before we wrap up our deep dive into Workday's Q3 earnings call, we'll be back in a jiffy to discuss their financials and what we can expect moving forward.
Welcome back to Talk Tickers. We've covered a lot of ground on Workday's strategy, but you know what they say? Show me the money.
Right, let's dive into those financials.
Okay.
Workday is on track to hit their full-year target of $7.703 billion in subscription revenue, a 17% jump from last year.
That's impressive, especially considering the overall economic climate. Not every company is posting those kinds of numbers.
It speaks to the value proposition Workday offers, and they're not just focused on top-line growth. Their non-GAAP operating margin of 26.3% in Q3 shows they're keeping a close eye on profitability, too.
So they're growing revenue and maintaining healthy margins, music to investors' ears.
Exactly. And their guidance for fiscal year 2026 is also promising. They're projecting subscription revenue of approximately $8.8 billion, which represents a 14% growth rate.
Okay, so a slight slowdown in growth, but still very respectable.
Right. They're anticipating a bit of a dip initially, but expect things to pick up in the second half of the year as their AI initiatives gain traction and those big strategic wins we talked about start contributing more revenue.
And what about profitability? Are they sacrificing margins to chase growth?
Not at all. They're projecting a non-GAAP operating margin of approximately 27.5% for fiscal year 2026, which actually represents an increase from their current level.
So they're aiming to grow both the top and bottom lines. That's a smart and balanced approach.
It is. They're investing strategically in high-growth areas like AI while simultaneously driving efficiencies across the business.
Okay.
This balanced approach should appeal to a wide range of investors, whether they're focused on growth or value.
It sounds like Workday is firing on all cylinders. They have a clear vision, a strong leadership team, a thriving partner ecosystem, and a relentless focus on innovation.
They're not just keeping up with the evolving business landscape, they're actively shaping it.
Yeah.
They're a company to watch, that's for sure.
And that brings us to the end of our deep dive into Workday's Q3 earnings call. We hope you found this episode insightful and informative.
As always, remember that this is not financial advice. Do your own research, consult with a qualified professional, and never invest more than you can afford to lose.
If you enjoyed this episode, be sure to subscribe to Talk Tickers and leave us a review. We love hearing from our listeners.
Until next time, happy investing, everyone.